for a lunchtime webinar. My name is Yulin, an investment lead at Indawas, and we are going to focus specifically on Sharia compliant investing today. And I have two distinguished speakers with us, Saurabh from Templeton Global Investments and Afiya from Azimut. And they will share their expert insights on how to navigate Sharia compliant equity and fixed income investing in a changing global environment. Now let's first go through some compliance disclosures. Great. So we will have some time at the end to answer your live questions. You can ask your questions by going through this Slido link and input Sharia 2026. So just a quick introduction to Indawas for those who are not familiar with us. We are a digital wealth platform currently serving both Singapore and Hong Kong-based investors. We are backed by global and venture shareholders and are recognized with industry awards. And I believe what makes us truly different is our focus on our core mission, which is to empower all of us to invest better, to live better. And our business model is aligned with our mission. So we aim to offer conflict-free advice to our clients and provide access to institutional-grade investment products at low fair fees. So today we have invited Saurabh, Senior Vice President from Templeton Global Investments, and Afiya, Portfolio Manager and Investment Specialist from Azimut Investment Management, to share their knowledge and latest insights on Sharia investments across equities and fixed income. Welcome again, and would you like to quickly introduce yourself and your company? Afiya, would you like to go first?
Yes, please. Thank you. Thank you so much, Yulin, and thank you to Endawas for giving us the privilege to organize this event and present at this event. Building on what Yulin already shared, I currently hold the privilege of being a part of the team which manages the Sukuk strategies within the Azimut Group. For those less familiar with the Azimut Group, Azimut is one of Europe's largest independent asset managers, which was established in 1989 and has spread globally to currently serve about 20 countries with an AUM of about $173 billion. Since 2011, we had started this expansion of expanding globally from being predominantly an Italian manager to a global manager that you see today. We are currently nearing our fourth decade, and we have grown into this powerhouse with over 220 professionals and doubling in size every 5 years. Over 90% of our AUM is in public strategies, and in the last half decade, we have grown exponentially also on the alternatives and the private credit side. So the question that you might ask me is that what makes us different from other asset managers? What makes us different is the fact that whenever we establish our office in a country, we have portfolio managers who are based in that country and running assets from that jurisdiction itself, so that we can navigate the complexities and the different opportunities that you get while you're based in the same region. For example, we basically run MENA based strategies. So we are based in the heart of Dubai in the DIFC. If we have Chinese assets, then the Chinese assets are being run from China itself. Just in the Middle East, we've got over 35 professionals. We have an AUM of about $24 billion. We were also the first European asset manager to establish and to bring Sukuk assets to institutional investors in Europe in 2013. We have grown exponentially, and I'm super excited to present the products that we hold today. Thank you.
Thank you, Afiya. Saurabh, would you like to go next?
Yes, absolutely. Right. Again, thanks for giving us the opportunity to talk about, our expertise in Sharia and generally to about what we do in equities. But I represent Franklin Templeton, which is one of the largest asset managers globally, with almost $1.7 trillion under management. There are essentially, there are 4 points which differentiate what we do at FT. One, we aim to be strategic partners for all our clients. We have unparalleled investment capabilities spanning public, private, and pretty much anything you can think across, anything which our clients need, we are able to provide that. We also aim to be thought leaders. There are a lot of innovation which is happening, and Franklin Templeton always aims to be at the forefront of providing our clients innovative thought leadership across all kinds of markets, as well as developments in the overall asset management space. Um, there are 1,500 plus investment professionals within Franklin Templeton, more than 100 investment professionals within Templeton Global Investments, which is a group within FT that I represent, and the group which manages the Sharia equities. Next slide, please. The other thing I think is important to understand is, right, as I mentioned earlier, right, our capabilities are really unparalleled in terms of what we can offer. So we can offer any kind of equity capabilities, almost everything under the fixed income umbrella. And slowly but surely, we have expanded our capabilities across alts as well as multi-asset as well over the last few years. So there are multiple asset managers, teams which sit within Franklin Templeton, which can provide our clients all these asset management building blocks as required. But most importantly, I think for the purpose of today's webinar, Franklin Templeton has also been a global leader when it comes to Islamic investing or Sharia investing. We have almost 5 billion or more than $5 billion in Sharia compliant assets. We have one of the longest running track records in managing Sharia compliant equities as well as fixed income across our multiple offices, which span Middle East as well as Asia. And we have been recognized for our excellence by multiple awards, as you can see on the screen now. So clearly, in terms of our Sharia capabilities, this has been built up over the last 2 decades, so that our clients can be rest assured that when it comes to Sharia compliant investing, we have all the tools, all the capabilities, all the expertise to make sure that we meet all the needs of our clients. Yeah, I'll stop here. Yeah.
Thank you so much for the introduction. Now let's get into the much anticipated session of the webinar, which is the market insights from you guys. So Afiya, let's start with you first. Could you give us a quick explanation of what Sukuk bond is? We would also love to hear your take on the outlook for this particular part of the fixed income segment and how it is currently being impacted by the conflict in Iran. It would be great if you can also share, as a portfolio manager, your approach in investing in this market too.
Thank you. Thank you so much. I think this is the most pertinent time to address these questions. So I'll start with what are sukuk? In basic terminology, we can think of sukuk having the DNA of a traditional bond, reimagined with an ethical conscience and a physical backbone. So I'll get into each element that I just explained. What do I mean by the DNA of a traditional bond? I mean that the economic substance of a sukuk resembles that exactly of a fixed income conventional bond. It is going to move in line with the rates globally, and it exactly has the same payment process as a traditional bond. What I mean by reimagined with an ethical conscience is that it complies with the Islamic and the Sharia law, which makes sure that the business activities which are underlying are halal in nature, which means it prohibits activities like pork or pork related products, gambling, tobacco, alcohol, etc. And the most important element, the physical backbone. What I mean by a physical backbone is that the sukuk is structured in a way that it is asset based in nature. That means that the investors who participate or who buy the sukuk are not getting interest on their investments because that is prohibited in the Islamic and the Sharia law. What they're receiving is a profit share of the underlying business activity, the asset, or the project that they have participated in, which is what differentiates us from a conventional asset. Although these assets still primarily rely on the credit strength of the obligor, which is the issuer that you are investing in, rather than the underlying assets. So they are not asset backed in nature, they are asset based. They have assets on the background because of the structuring, but they would not typically have direct recourse to them. So when we judge the credit strength of the sukuk, we judge the obligor, not the asset. Which means that if I am going to buy an Indonesian bond, I'm going to be gauging the credit strength of Indonesia independently, and not the assets that are being used to create the structure. What's interesting is that major markets for these sukuks were predominantly the Islamic Muslim nations like Indonesia, Malaysia, Pakistan, and the Middle East. But we have seen the growth and the diversification potential of this asset grow in the last decade, where multiple different jurisdictions are expanding and using it as a funding tool. For example, even in the past, countries like United Kingdom or Luxembourg have used the sukuk as a funding tool, which is very interesting. Currently, we have different countries like Kazakhstan, Tajikistan, Azerbaijan looking at Islamic windows because of the diversification potential of this funding tool, which makes it all the more interesting as an asset class today. In the last one decade, we have seen the sukuk market, it has metamorphosed into from a niche market from only few countries and a few corporate issuers into a proper mainstream asset class with global investors, global asset managers from the likes of the largest asset managers who are based in the US, based in Europe, based in Asia, looking at it as an asset class that they can use to invest in, with issuers also looking at it as a funding tool. What I've tried to show in the chart below is that predominantly the split between conventional issuance and sukuk issuance was on average 25 to 75. So 75% of issuers used conventional as an easy route to access funding in the capital markets. Although today we are looking at a range of about 50-50%, which is massive. In the last 3 years, that the kind of growth that we have seen has been exponential in nature. We have seen different diversified issuers with airline leasing companies listed in the US looking at it as a funding tool, which makes it so much more pertinent as an asset class for investors today. We'll move on to the next slide to showcase the differences. This slide is very, very interesting for us because it showcases the differences as well as the similarities of both the assets. Because most investors confuse and they believe that it does not move at the same level or it does not perform at the same level as a conventional asset, a fixed income asset. What we mean by a sukuk is that we are structuring the instrument in a way that the investor has an ownership in the underlying asset. While in a conventional debt obligation, it would just be a plain vanilla debt obligation and you receive interest. The issuers and obligors remain the same. You have corporates, sovereigns, supranationals, quasi-sovereigns accessing this market. Because, as I mentioned, interest is haram and it's not allowed as per the Sharia law, what we generate in terms of our semi annual or quarterly coupons is a share of the profit which is generated by the asset or the lease rentals or different business activities that have been pledged. While in a conventional debt, you have cash generation from operating activities, which are generic. In the interest rate schedule, they are similar again. They are fixed or floating rate, and they could be structured in different ways. In terms of size, I would like to highlight that the outstanding sukuk currently has grown to over $1 trillion in FY25 and expected to grow further. It is one of the fastest growing assets in the Islamic finance space. While in the conventional debt side, you just have in US corporate IG, you have about $7 to $8 trillion of assets. While in EM, which is emerging market sovereign hard currency, which is USD assets, you have about $1.5 trillion. And just corporate USD across emerging markets, you have $2.5 trillion. So we are growing in size. We're not there yet, but we are definitely growing in size. In terms of rating, this actually is one of the most interesting aspects. The ratings of almost more than 75% of hard currency sukuk, which is USD sukuk, are investment grade in nature, which means that they fall on the spectrum of credit ratings and safety of the issuer at the highest level. They are not speculative in nature, they are not high yielding assets. Most of the assets and the issuers are investment grade. While in conventional debt, you would have a wide spectrum of assets and different ratings, which include speculative, which would include distressed also. Why the next segment, which is also quite interesting and diversifies us, is the fact that our biggest investor base are Islamic banks and Islamic funds. Being Islamic in nature, we do not have a lot of different opportunities to invest in assets which do not conform to the Sharia law. And this asset management size and the Islamic banking size is growing exponentially, not just in the conventional markets, but also in different other Central Eastern Asian, European markets, African markets, which makes us more comfortable with the fact that the investor base is growing and they have the opportunity to invest only in Sharia assets. So they're more buy and hold investors instead of being fleeting assets which are going to be sold at the first level of distress, which gives us a lot of comfort to be invested in Sukuk. As mentioned, they are more resilient. Sukuk are more resilient just by the inherent nature of the demand that you have compared to the supply that you have. While conventional debt, especially emerging market assets, are very volatile in nature and they could be the first assets to be sold when you have signs of a global distress, like the ones that we have currently today. In terms of indices, we have multiple indices which are able to replicate, and people are able to actually invest and view their assets and monitor how we are performing against a benchmark too. So that also really helps us. We move on to the next slide. The purpose and the benefits of Sukuk issuances. Why do issuers use this as a funding tool? It could be used by multiple, as I mentioned, governments, corporates, financial institutions, quasi-sovereigns. They are raised predominantly toward, they could be used for diverse projects like infrastructure projects. For example, African nations use local currency sukuks to fund their infrastructure projects, while you could use it for real estate development, business expansion, everything that a normal fixed income investor would expect from their issuer. So there's no difference between a sukuk issuer versus a conventional debt issuer. The benefits are vast. We have stable returns like a conventional fixed income asset, semi-annually, quarterly, depending on the instrument that you choose. We would be receiving the coupons in the form of profit sharing or rental incomes, depending on the structure of the sukuk. You could also, as I mentioned before, it has an ethical conscience, and with the growth of ESG-based investing that we're seeing in the last decade, this could be like an ESG plus product where they were adhering to Islamic principles and upholding the ESG principles too. So it could be very useful for investors who are also looking at ethical investments. In terms of diversification, we are the most well-positioned product because you could use this asset class to diversify across different sectors, projects, different sovereigns, and reduce the impact of any poor performing asset in their portfolio. In terms of reach, the Sukuk markets have expanded globally, as I mentioned before, offering investors access to international investment opportunities and different issuers like airline leasing companies, food products, with the utilities, everything that one can think of. We have those industries currently prevalent as of now. And the most important and the most pertinent question for investors, especially fixed income investors, what is the default rate of these papers? Less than 0.25% of all sukuk ever issued, which basically started and grew exponentially since the 1990s, and Bahrain and Malaysia and these countries basically use the USD funding tool since the early 2000s. I'm talking about over about 3 decades. Only 0.25% sukuk has ever defaulted in the history of the asset class. No sovereign sukuk has ever defaulted. So that also places a lot of comfort in the mind of the investors, where they know that the assets that they're investing in are relatively safer in nature. Now I'll move to the outlook of Sukuk issuances. The growth and the size we have witnessed, the kind of transactions that we have witnessed in the last 2 years has been exponential and parabolic in nature. Record number of deals, we have surpassed $1 trillion, and also a lot of different issuers. For example, we saw a telecommunications company from Turkey coming to the market and issuing sukuk for the first time. We saw a petrochemical company from Turkey coming to the market for the first time and issuing sukuk. All these issuers were predominantly conventional issuers, but they understood the diversification potential of sukuk as a funding tool and the strength of the underlying investors. So that also really helps us. We continue to expect this size and this market to grow in the next decade too. In terms of the underlying issuers, as I mentioned, we have a lot of Middle Eastern nations who issue this, especially on the hard currency side. They have a lot of capital expenditure programs. As we know, Middle East is growing exponentially. We have the Vision 2030 program in Saudi Arabia, the giga projects, the mega projects. UAE has multiple programs that are in line, and we expect those programs to be funded using sukuk, and use these funding tools more and more in the near future. To just give some context, almost 40 to 50% of sovereign sukuk that was issued, 50% was almost Saudi Arabia last year. And we expect that to grow because majority of the local currency sukuks issued by Saudi Arabia was the majority of the issuances that were done was sukuk, and it wasn't conventional. So that also shows us the strength of the market. The investor base is just wide and diversified. We have so many new Asian investors who are looking at it. We've got different multiple Asian banks, Chinese banks, Asian Singaporean as yourselves, looking at this asset class, and Middle East and USD issuances more and more. They are investing not just on the sukuk side, they are investing, they're underwriting a lot of deals on the conventional side, they're providing bilateral facilities. And I must say that there are massive facilities that are being put in place for Saudi Arabia, UAE, and other GCC nations too. So the investor base is diversifying. Initially, when we used to see a sukuk issuance, predominantly the allocation would be done to Middle Eastern investors because that was the major investor base. But today we've got UK, US asset managers who are extremely active, and they come with size to participate in these sukuk issuances. So that goes to show that the eyes that we have witnessed are expanding globally. It's not just one investor base anymore. Multiple people are looking at this asset class. So that gives us more comfort. As I mentioned, it is also an ESG sort of ESG plus sort of a product. There's a lot of ESG compliant sukuk, and we expect this market also to grow exponentially in the next few years. I'll just move on to the next segment. The most important segment that we are probably going to address today is that we are in the middle of a conflict currently, and the region has been pulled into a conflict which was not ours, and it was not made by us. We were not participating in it. But I currently sit in the DIFC, which is the Dubai International Financial Center. I sit in Dubai currently. I feel extremely safe because of the leadership that we have. not just in the UAE, also in Saudi Arabia, in Kuwait, Bahrain, Oman. All of us feel extremely, extremely safe, and we do not feel the need to leave the nation despite being expatriates and not local population. Because when we enter this conflict, we enter this conflict from a position of strength. We have safety, security at every level, food security, nothing has been compromised. Business is moving as usual. Outside the UAE and the GCC nations, the perception could be that we are facing a lot of troubles, but be rest assured, business is as usual. We have been speaking with multiple issuers, with multiple corporates, with the governments, and we have been given the reassurance that they are there to protect us under every scenario. And that's one of the reasons why the number of casualties or the number of or the number of people affected by this conflict in the GCC nations is extremely, extremely low. But yes, we are in the middle of the conflict, and we hope, and the majority of the people believe that this conflict is going to be short term in nature, and we will not see it extend to really long periods. So, hopefully. Coming to the financial side, this chart has been prepared on the 16th of March, 10 days back, which basically shows that we were almost 16 days into the conflict. And I'm trying to highlight over here that the different conflicts that we have seen around us in the last 3 years, and how the spreads have moved in that duration. We have spreads of around 90, which means that the credit risk that you have, which is separate from the rates, the US treasuries, is just 90 basis points. Before the conflict, we were around 70 to 80 levels, and currently we're at about 90 to 100 levels. In the past also, we have seen when the conflict started, we have seen that the spreads have widened, but very, very, very quickly they have come back to their levels and actually moved lower. That gives us comfort with the fact that things are not as bad as people expect them to be in a short-lived conflict. And financially, we have not taken the kind of hit that people expect. To just give context, in 2022, the spreads were much wider the GCC IG index compared to what they are today. And we are in the middle of a conflict, an active conflict in the middle of a war. So that shows that investors do draw comfort from the underlying fundamentals of the region. We are extremely safe. Our assets covering our GDP are almost 2x. So that shows that we have surpluses. Our break even oil prices are relatively low. Not like that would affect us because oil prices are extremely high right now. But everything that we entered this conflict with was positive. We had one of the fastest growing real estate development and real estate prices in the region. So we are very extremely, extremely positive about the fact that we are going to survive this and actually come out of it stronger. On the Sukuk side, on the next slide, I'd like to highlight that we saw similar moves, and we expect these moves to again be contained. To be fair, majority of the moves that we saw in terms of issuers were issuers which could be directly impacted by the conflict, which would be hospitality, tourism. But across board, when you have so many sovereign issuers, which encompass almost a quarter of the issuers, you have banks and financial institutions, you have quasi sovereigns, which are extremely protected and have very, very strong balance sheets. They have not seen the kind of impact versus the relatively more affected parts of the universe. Moving on to the next. This is again what I wanted to highlight, and this showcases the strength of our asset class. And I can't highlight this enough. In 16 days of the conflict, still, despite the fact that we are in the middle of a war zone, the GCC Sukuk index was one of the best performing indices in the fixed income space. In the last 5 years, our volatility has been less than 2%, especially on the DJ Sukuk side or even on the fund side. versus all the other indices that you see mentioned over here, which are major indices: emerging market investment grade, emerging market diversified, or global ag, which is the global investment grade index. All of them have been taken a hit because of US rates and the war, obviously, but we are still insulated. That goes to show that people understand that our balance sheets are strong enough and the underlying fundamentals of our region are strong enough to withstand this and come out stronger. So I'll end this over here and I'll allow Saurabh to go on. Thank you so much.
Thanks a lot, Afiya. I'll move on and talk about the equities world now, which is somewhat very different to the Sukuk world. More exciting, I hope. More and gives you a very broad set of opportunities across the board. Before we begin, right? First questions first, right? So, what exactly is Sharia compliant equity investment? What exactly are we trying to achieve here, or what's the objective? Essentially, the objective is not very different from what any conventional investor would think of. In the end, the goal is to meet your financial needs over the long term while remaining compliant with the Islamic principles. That's the core of what we do in our Sharia equity investment approach. So what we are essentially trying to do is trying to bring together alignment of values with the best of investment capabilities. So it's an approach which prioritize ethical investments and aligned with the moral beliefs and Islamic teachings. This appeals obviously to the Muslim investors, but not just them. It's actually something which is very relevant, we believe, for a very wider cohort of socially conscious investors. In fact, as Afiya was also alluding to earlier, Sharia investing is essentially in some way a predecessor of what we call ESG investing nowadays. So a lot of the principles actually are actually common across both approaches. Second point, and an important point, is that this also allows portfolio diversification. You get a diverse set of exposures related with just the traditional assets, and it helps investors to spread their risk and broaden their financial holdings across different assets. Thirdly, and very importantly, I think Sharia compliant investing has grown as an asset class on its own over the many years, both on the equity side as well as on the fixed income side, right? There's a lot of structural changes. We have seen rising population growth in many of the geographies which are naturally aligned to Sharia investing. Financial penetration continues to grow up in many of these geographies, and you see more and more geographies which essentially are now considering this approach as well. Lastly, and not the least, I think is right, Sharia investing is also helps in promoting growth and development in many developing parts of the world. Like especially if you see in this part of the world, this is an important source of fundraising for many companies as well as institutions to which help in overall promoting the socioeconomic development of many countries. So it serves both purposes. It helps investors meet our goals, but at the same time promotes economic development in many of these countries. Moving on, right? What exactly do we do when we do Sharia compliant equity investing, right? I mean, there are essentially two broad themes here. Number one, easy business activity screening. Essentially, anything which we think is non-compliant or they have a significant part of their revenue coming from non-compliant activities, which could include alcohol, weapons, and many of other such non-halal activities, are excluded at the first stage itself. Second screen is financial screening. Leverage ratios, where the interest income is coming from, debt levels, all of these are screened on a regular basis, both at the time of investing and an ongoing basis, to make sure all the financial ratios are within acceptable limits. Importantly, all of this is overseen by an independent Sharia board, which will oversee the criteria which is being set and then certify products for compliance. So although managers like Franklin have best in class tools and capabilities to implement this, we still make sure that independent third parties would certify and verify anything and everything that we do. Now, what exactly do we do on the first part, which is the Sharia screen, right? We are a very bottom-up, fundamental, research-driven house. We always believe in identifying companies which are sustainable growth characteristics, which should meet both our growth, quality, and valuation. But the first step of the process itself, even before we go to our fundamental process, is essentially to put the entire universe through a Sharia screen. Now, our Sharia screen would exclude anything that you see on the list on the left-hand side of the screen, alcohol, tobacco, firearms, etc., etc. And at the same time, important point is this is reviewed and approved by the Amani International Sharia Supervisory Board. The Amani scholars will provide initial approval, and more importantly, they also do ongoing supervisory and monitoring services to ensure that the portfolio at any given point in time will remain, operate within the Sharia principles. Moving on, in terms of the guidelines that we set, right? I think it's an important slide in terms of the details of how we actually think about the Sharia screening. Business activity screening I talked about, which the details are there on the screen. Financial screening is an important part of what we do as well, right? So we do not allow to invest in anything where significant income or interest from companies that have excessive leverage, like more than 5%. The fund was also subject to measures of financial screening, such as your conventional debt to assets should not increase a third of this, and similarly many other financial metrics to make sure that any given point in time we are always in compliance with the best practices prescribed by the Islamic scholars for Sharia investing. The next slide actually talks about the independent board, which is the Amani International Sharia Supervisory Board, which we use to make sure that we have independent valuation or independent validation, I would say, of anything and everything that we do as part of our Sharia investing process. Now, this board comprises of eminent scholars who are not just, they serve on Sharia boards of several major Islamic institutions and have provided services which are well accepted by almost everyone across the industry. So our investors can be rest assured that everything and anything that they see in the portfolio is likely to be halal, independently certified at all points in time. Moving on in terms of the next step, which is the underlying fund itself, right? We have a long-standing track record in managing Sharia investments. Alan Howe, who's the main portfolio manager for this strategy, has been running this for almost a decade, supported by a very, very strong portfolio management team. Now, this team is part of Templeton Global Investments, global equity group. Very, very long legacy in managing global investments. In fact, this is a team which was set up by Sir John Templeton himself back in the 50s. So almost 80 years of track record in managing, global equity investments. Very large group with over 120 investment professionals spread across 19 countries. So the important point to understand is, right, we got boots on the ground almost everywhere. Whether we are evaluating opportunities from US to Japan to China to anywhere in between, we got local analysts on the ground covering stocks and going very deep into each of these markets to make sure that we find the best ideas to populate the portfolios that we seek to invest in. I think we should again highlight that we have extensive Sharia compliance resources. What do we do? One, as I mentioned earlier, independent endorsement. Second, We employ world-class screening technologies to make sure that the business activities are being screened continuously. We are screening for the financial ratios continuously, and this is done in a very sophisticated and an ongoing basis to make sure that portfolios remain compliant. And lastly, but not the least, right? I think we have employed very comprehensive integrated risk management tools, which is essentially best in class across the industry. And each portfolio teams would make sure that the team is adhering to the risk limits and the risk budgets that they are given. Moving on, in terms of how do we actually construct the portfolios, right? Or how do we filter down? The actual portfolio that you see is essentially a best ideas portfolio of 50 stocks. We start with as I said earlier, a broad universe of Sharia compliant stocks, from which, after the screening, we narrow it down to what we called a 300 stocks of a Templeton equity database. Now, these are the stocks which we actively cover using fundamental research. These are the stocks which we believe meet our criteria on governance, quality, growth, and as well as valuations. And these are stocks which we think are the ingredients that you need to construct a portfolio which can generate or which can be resilient across multiple cycles. Portfolio managers essentially choose stocks from this database to construct a best ideas portfolio of around 50 stocks. And then there's an ongoing portfolio review. I would always say portfolio management and risk management are, essentially the same job. 50% of a job of a portfolio manager at any given point in time is always to look at risk. And that's something that the portfolio managers will do all the time. Moving on, in terms of how do we see the opportunity set at this point in time? As you can see on this slide, right, in terms of the opportunity set for the fund, from a sector perspective, information technology remains a significant bucket of opportunity for us, although we are underweight versus the benchmark, but it still remains the single largest sector weight within the portfolio. Second, and a very important source of alpha generation or ideas for this portfolio is industrials. Again, 25% of the portfolio sits in industrial. This is across different themes, which I can talk about in a bit more detail. But industrial stocks, which could be across energy, which are across multiple industrial applications, software, are all embedded in this bucket. The other things we like are actually healthcare, and energy stocks is something which is also an important part of the portfolio. From a geographical perspective, you would see that US is the largest part of the portfolio, but it's a significant underweight versus the benchmark. We have concerns on the valuations of that market, although we do still see some significant bottom-up opportunities. The overweights for the fund are largely, would be in two main geographies. We have a significant overweight in Japan, where we see lots of bottom-up opportunities. And we also have a significant overweight in Europe, where also we are seeing a kind of a renaissance happening at this point in time in terms of how the countries are trying to finally do a lot of fiscal spending and renewal of the industrial base happening in Europe. So those were the main overweights in the portfolio. If we can go to the next slide. Now, US is an interesting point to think about, right? That US is still trading at a significant premium to global ex-US. US makes up almost 60% of the global universe, but it has always traded at a premium. It continues to trade above the average. So it's still at more than a 40% premium to the ex-US global markets. But the important point to note and remember is that the growth differential between global ex-US markets and the US market has narrowed substantially. In fact, over the next 2 years, the earnings growth for global ex-US is almost same as what the US market is offering. But the global ex-US markets are almost 40% cheaper on a price to earnings valuation at this point in time, which makes us that from a relative basis, we see a lot of opportunities in other markets. Japan is essentially a good example of what's really happening, right? It's a market which is generally underweight in global portfolios. It trades at a significant discount to many of the to the global portfolios, but we see a lot of fundamental opportunities in Japan, and this is coming from two broad themes in Japan. Number one, Japan has broken out of the deflationary mindset that it was in for the last 3 decades. Inflation is now well and truly entrenched in Japan, and this has led to a revival of the domestic part of the Japanese equity market, which was almost dead for the last 2 decades. And this has created opportunities for stock pickers like us. Second, and even more important point for Japan, I think, is that there has been a huge improvement in corporate governance. And this remains a main theme for Japan, where many Japanese companies have now explicitly started targeting better ROE, better growth, better capital return, which never happened in Japan. All of these things lead to a re-rating of the market and also creates a lot of opportunities for stock picking. So you put it all together, we are very positive on Japan in terms of the opportunity set over the next decade. Moving on in terms of the next big overweight, which is Europe. I think Europe is something where we have seen a significant major policy shift. One, there's a lot of focus on improving European competitiveness. And more importantly, Germany, which is the largest economy in Europe, has essentially moved to a more fiscal spending. So this is an important part of the whole narrative for Europe, where fiscal spending is finally happening in Japan. A lot of reindustrialization and infrastructure build out, which was not happening for the last 30, 40 years, is also happening. So you see a clearly spend where almost $1 trillion of spending could happen in Japan based on this policy announcements, and that is very positive for the earnings growth of the companies which operate in those markets. But at the same time, the valuations for Europe, still remain fairly reasonable. It's still trading at almost a 30% discount to the global benchmarks, even at this juncture. So we continue to see a lot of opportunities in Europe. Last point I think I would like to make, and an important point is, right, and a lot of times the question that we always get is, right, hey, by investing in a Sharia compliant portfolio, are we giving up on returns, or is it coming at the expense of performance? And the answer is not easy. We can plot on different time horizons and how a Sharia compliant portfolio has performed over the versus a regular portfolio. And I would see that there's no clear trend. In fact, the chart that you say is over the last 5 years, and you can see both portfolios have ballpark given the same return. ACWI has outperformed, annually by almost around 40 basis points, but it's very marginal. And also, I think the important chart is that the fundamentals are not very different. And this is an important point. In the end, that's what's going to govern how the asset class performs. As you can see, the ROE that the Islamic universe generates is almost the same as what the ACWI generates, or the regular universe. There's very, very, very marginal difference between the two, which makes us positive that Sharia investing may not necessarily come at the expense of performance. And this is an important point for investors to understand, that meeting your moral values and your investment goals are not mutually exclusive, and they can actually be achieved at the same point in time.
Thank you, Saurabh.
I'll stop here. Yeah.
Yeah, thank you so much. We have learned so much from you and Afiya, and since we have you here and we still have some time, I want to maximize, the time with you and, You have talked a lot about how you guys approach equity investing, and while Afiya has given her take on the market, I think, Afiya, you haven't really talked about your approach to Sukuk investing. So can you just quickly give us some points as to how you select funds in the Sukuk market? What's your philosophy and approach in that market?
So thank you again. I think building on what Saurabh already mentioned, because the underlying structure remains the same. We also structure at the core of our strategy. We first take approvals from the Amani Sharia board. We share the same board, and we receive a fatwa before investing into any asset, which is going to be monitored by the board over a period of time. At the heart of our strategy, we are a well structured strategic fund which is carefully curated to be investment grade in nature. We will always have strong credit quality, as I mentioned. We want to create a product which navigates market fluctuations with resilience so that you will always have the peace of mind. At the top, how we construct the portfolio, it's a dual layered process. We combine top down research, which means that we initially start off at the country level, then we come to the industry level, and then we go deep into micro deep credit selection, because that plays a very, very critical role in the sukuk markets. So we have a dual layered approach. And this helps us understand the broad macroeconomic trends, which helps drive the interest rate direction, while the credit selection helps us generate alpha for the fund. We have different proprietary tools, as sure even Saurabh alluded to, that they also use different tools to identify the most important segments of the universe, and then we filter it down, and less than 50% of all issued sukuk actually goes into the strategy. We do in-depth credit research. We a small part of our strategy also does a lot of relative value trades, which means that we find credit spreads which are mispriced due to idiosyncratic factors, and we, because we are on ground, we know the issuers, we know why it's happening, and it could be technical in nature. We use those opportunities so that we can generate alpha for the investors. And last but not the least, because Saurabh also ended his topic on the performance, in terms of performance, we in sukuk markets were the most resilient markets. As a fund, we were down only 5%, while the benchmark was down about 7.8%, versus global benchmarks in 2022, which were down between 17 to 20%. So that shows that the client and the investor is always going to be protected. We want to navigate through the different interest rate hiking cycles, cutting cycles, in a way that we will provide peace of mind to the customer at all times, and at the same time make sure that the performance is not impacted. We are, in terms of performance, top quartile performance. To be honest, we won the place of being a part of 250 top Eurostar fund managers out of 16,000 funds, and we were 26th in nature. And this is not just sukuk assets, this is global fixed income assets. That shows the performance of sukuk is not hampered by just being Sharia compliant in nature. It actually helps because we navigate through different cycles much more effectively. That's how I'd like to end it. Thank you so much.
Great, Afiya. Thank you so much. So I was looking at the Slido question. There was a question, or rather a comment on, how can retail investors easily access Sharia compliant investment? And a peer has been mentioned where you could access there. I just wanted to, I guess, directly address that, and I will provide more details as well. That actually we, as a platform, we also have a number of Sharia compliant funds, including the ones from Azimut and from Franklin Templeton, having conducted, extensive due diligence on both funds before we onboard their products onto our platform. And for those investors who actually don't really know how to pick between different offerings, our investment office has curated a portfolio of funds that is tailored to different investment needs, risk tolerance, and investment horizon. So maybe it will be helpful if I just spend a quick few minutes on our Endowus Sharia portfolios and guide you in terms of how you could access it on the platform. Let me just go to the slides first. Great. Yeah, so as you can see, the Endowus Sharia portfolios utilize differentiated Sharia compliant solutions from a number of fund managers, including Franklin Templeton and Azimut, and build optimized allocations for different investors' risk tolerance. So for the equity component, for example, we have 3 funds from HSBC, Templeton, and Franklin. And for the fixed income component, we have 2 Sukuk funds, one from Azimut and another one from Franklin. And we have 6 different asset allocations between fixed income and equities, from 100% fixed income or Sukuk portfolio for the very conservative investors, and 100% equities, Sharia compliant equities for the very aggressive investors, and you can choose accordingly based on your horizon risk tolerance. This is a closer look at the underlying allocation to each fund manager, and importantly, you can see that the total expense ratio, which is the cost of accessing these funds that you pay to the fund manager, so managing your funds, is capped below 1%, so it's relatively affordable. And as Afiya and Saurabh has already mentioned, I think Sharia compliant investment universe is relatively fast, that provides a diverse set of opportunities, and this is reflected as well in the Endowus Sharia equities portfolio, for example. It is globally diversified, as can be seen on the left-hand side of the pie chart. It is, of course, the biggest weight is the US, and because of the underlying fund, the portfolio is slightly overweight US versus a generic global equities index that's represented by the MSCI equity benchmark. And in terms of the sectoral allocation, again, it's very diversified. It is slightly overweight technology because there is an allocation to the Franklin Sharia Technology Equity Fund in the underlying portfolio. And structurally, sectors such as financials and real estate would be underweight because of the non-compliant nature with the Sharia filters. And moving on to fixed income, the Sukuk portfolio, it is, again, the characteristics reflect what Afiya has already mentioned. It is average investment grade. The duration would be slightly shorter versus the global fixed income index, as represented by the global aggregate bond index. And the exposure would be more tilted regionally towards the Middle East issuers like Saudi Arabia, UAE, which are really high quality investment grade type of issuers. In terms of sector allocation, there will be much less to the conventional sovereign bonds. I mean, there's less to the government related ones, but more tilted towards corporate bonds in the portfolio. And lastly, just a quick slide on performance, which I think is consistent with the narrative from both Afiya and Saurabh. The Sharia layer doesn't necessarily mean that you need to compromise performance. It might move in different directions at different points in time with the global kind of investment universe. But for example, if we look at the past 8 years, almost 8 years of performance for the Endowus Sharia equities portfolio, you can see that it actually has outperformed MSCI equity, primarily because of its overweight to technology and healthcare companies, which was a main performance driver after 2020. And for the Sharia fixed income Sukuk portfolio, well, you can see that in 2022, while the global fixed income market experienced a historical shock because of the rate hikes, because of the shorter duration nature of the Sharia fixed income portfolio, it actually shielded the portfolio relatively well. It does move in different trajectory upward because of, I guess, the difference in the underlying characteristics. But overall, it actually has performed in line over the past 8 years versus the global aggregate index. So just a quick guidance as to how you could access, this curated portfolio on Endow. In the YouTube chat, in the YouTube screen, you can see that there is this description where there's a link to the insights article that we have written that will take you on a deep dive to the Endow Sharia portfolio. And at the end of it, you will actually find the deep links to the multi-fund portfolio that we have already created for you. And you can click on the asset allocation that is, in accordance to your risk tolerance. And not to worry if you are not sure what to start with, because once you click on the link, there will be an advisory process to guide you through, whether this portfolio is actually suitable for your stated risk tolerance and time horizon. And if it's suitable, we will let you know. If it's not suitable, we will also let you know, and you can choose a different asset allocation. So that is how you could access Sharia compliant investment options on our platform. I just wanted to, I guess, check if there's any other questions, and we can address it as well. This question is interesting, and I guess it's more specific to Sukuk. So there is a question on how do you differentiate the cash flows between interest and profit sharing. Afiya, could you help us with this question?
Yes. So there is, as I mentioned before, we have an independent Sharia board, and the Sukuk is structured in a way wherein they get an approval from the Sharia board. And after that, only once we get an approval, we can invest in that. So there is no need for differentiation. There is no interest element at all. The entire structure is based on profit sharing. Because it is haram, the structure would not be approved if there was interest element. So it is predominantly and completely profit sharing, depending on the structure. Yes.
Yes, that's very clear. Great. Just one last question, which I think I can address. There is a question on if there is any retail available options for Sukuk. I guess the person meant single bonds, and if the only retail available option to access Sukuk bonds are Sukuk fund. Well, the Sukuk funds, both from Azimut and Franklin, are retail available in Singapore. So you can definitely access, and I would argue that's a better way of accessing Sukuk investments because it's in a more diversified manner, and it's managed by professional managers who spend their, most of their days looking at the market and choosing the investments for you and managing them actively. So that's not a bad option if you want to consider that. Great. I think we're on time, and I just want to say another big thank you to both Afiya and Saurabh for spending your morning and your lunchtime with us. I think we have learned a great deal from both of you. Thank you for sharing your insights, your knowledge, and everything. And thank you to the audience for joining us today. We hope that you have some takeaways after this. Yeah, thank you so much.
Thank you. Thanks for having us.
Thank you for having us.